When the market moves, how much will your investment move with it? That's exactly what beta helps you measure. Today, we're breaking down what beta is, how to interpret it, and how you can find it for any stock, ETF, or fund in just a few clicks. My name is Matt Maresh, your host, and welcome to Retirement Ready Nation, where we turn retirement jargon into plain English and strategy into peace of mind. So what is beta? Beta is a number that tells you how sensitive an investment is to overall market movements. In simple terms, it measures market risk or systematic risk of how much an asset is expected to move in relation to a benchmark like the S&P 500. The market or benchmark itself is always given a beta of 1.0. A beta higher than 1.0 means the investment is more volatile than the market or benchmark. If a beta is lower than 1.0, it's less volatile than the market or benchmark. A beta of 1.0 means it moves in line with the market or comparative benchmark. If you have a negative beta, it tends to move in the opposite direction. Let's walk through some real-life examples with the S&P 500 as being the benchmark. A tech stock might have a beta of 1.4. That means it's 40% more volatile than the S&P 500. A utility stock might have a beta of 0.6, which means it's more stable and moves less than the S&P 500 market. A bond fund might have a beta close to 0, which means it's not strongly tied to or correlated with the S&P 500 market movements. Why beta matters for investment planning? If you're nearing or in retirement, beta helps you understand how much market risk you're carrying. A portfolio with high beta investments may grow faster, but can also fall harder during market downturns. Low beta portfolios may not be as exciting, but they often provide more stability, something many retirees value more than chasing maximum returns. Now, I know the community is asking, where do I find this beta? If you're looking for sources to find beta, you've got a few solid options. Your investment professional can provide you specialized research tailored to the specific investments you are considering. Fun fact sheets usually outlay key details like performance, holdings, and risk metrics such as beta. Beta is a simple but powerful way to understand the risk profile of an investment compared to the broader market. Whether you're adjusting your retirement portfolio, picking between funds, or just trying to reduce volatility, beta gives you insight into how reactive your investments are when the market swings. If you found this information helpful, be sure to like and subscribe to Retirement Ready Nation. Want me to break down another investment topic? Drop your suggestion in the comments below. I'd love to hear from you. This channel is for information purposes only. It should not be construed as tax, legal, or actuarial advice. Ashbury Boutique Wealth Management and the Leaders Group do not replace those professionals.